Today's discussion focuses on an important topic that continues to generate attention among Iraqi Dinar followers around the world, and that is the structure of Iraq's exchange rate system and the role of the Central Bank of Iraq in managing the value of the Iraqi dinar. Many people hear terms like pegged currency, managed exchange rate, or Forex market, but there is often confusion about what these terms actually mean and how they affect the Iraqi economy and the future of the IQD. The key point from today's news is that the Iraqi dinar is not freely traded in the same way as many global currencies. Instead, the exchange rate is tightly managed and controlled by the Central Bank of Iraq, commonly known as the CBI. This means that the value of the dinar does not automatically rise or fall every day, based purely on open market speculation, investor sentiment, or Forex trading pressure like currencies such as the euro, British pound, or Japanese yen. To better understand this, it is important to explain the difference between a free-floating currency and a managed or pegged currency system. In a floating exchange rate system, the value of a currency changes continuously based on supply and demand in international markets. If investors lose confidence in a country's economy, the currency can weaken rapidly. If investors gain confidence, the currency can strengthen. These movements happen constantly and are often influenced by inflation, interest rates, political events, trade balances, and global economic conditions. However, Iraq operates under a different model. The Central Bank of Iraq actively manages the dinar's exchange rate. The bank sets an official rate and uses monetary tools, foreign currency reserves, and banking controls to maintain relative stability. This is why the dinar has often remained remarkably stable, even during periods of political tension, regional conflict, oil price volatility, or economic pressure. This point is extremely important for IQD followers because it changes how the Iraqi dinar should be analyzed. Many people attempt to compare the IQD directly to freely traded currencies, but Iraq's monetary structure does not function in the same way. The central bank plays the dominant role in determining exchange rate policy, and any major adjustment to the dinar would likely come through deliberate policy decisions rather than sudden speculative market movements. Historically, Iraq has relied heavily on oil exports as the foundation of its economy. Oil revenues generate the majority of the country's foreign currency income, particularly US dollars. Because Iraq's economy is so dependent on energy exports, maintaining currency stability has long been viewed as a critical objective for Iraqi policymakers. A stable exchange rate helps the government manage imports, control inflation, stabilize consumer prices, and maintain confidence in the financial system. One reason the Iraqi dinar remained relatively stable even during conflict is because the central bank used its foreign currency reserves and monetary authority to defend the exchange rate. In many countries facing war or instability, currencies collapse because investors panic and capital flees the economy. Iraq's situation is somewhat different because the government and the central bank maintain strong influence over the financial system, especially through oil revenue management and state-controlled monetary policy. Another major factor is that Iraq conducts a large portion of its trade and government financial operations in US dollars. The dollar plays a central role in Iraq's banking and commercial activities. Through the currency auction system and reserve management, the central bank regulates the supply of dollars entering the domestic market. This mechanism helps stabilize the dinar and reduces excessive volatility. For short-term implications, today's news reinforces the idea that sudden or dramatic changes in the Iraqi dinar exchange rate are unlikely without a formal policy shift from the Central Bank of Iraq. Investors and followers who expect rapid changes based solely on rumors, speculation, or external events should understand that Iraq's currency system is designed specifically to avoid uncontrolled volatility. In practical terms, this means the IQD often moves slowly and cautiously under the direction of policymakers. Exchange rate adjustments, when they occur, are typically connected to broader economic reforms, fiscal planning, inflation management, trade policy, and coordination between the Iraqi government and the central bank. This controlled approach can provide advantages for economic stability. For example, maintaining a relatively predictable exchange rate helps Iraq manage import costs. Iraq imports a significant amount of food, consumer goods, machinery, medicine, and industrial products. If the dinar were to fluctuate wildly, prices inside Iraq could rise sharply, creating inflationary pressure on citizens and businesses. Currency stability also helps the government prepare annual budgets more effectively. Since oil exports are priced globally in US dollars, Iraqi authorities must carefully manage how those revenues convert into local currency spending. A stable exchange rate creates greater predictability for public salaries, infrastructure projects, and social programs. At the same time, a managed exchange rate system also has limitations and challenges. One concern is that maintaining a fixed or heavily controlled exchange rate requires large foreign currency reserves. The central bank must possess enough dollar reserves to defend the exchange rate during periods of economic stress. Fortunately for Iraq, oil exports have often provided significant dollar inflows, especially during periods of higher global oil prices. However, when oil prices decline sharply, pressure on the financial system can increase. Since Iraq depends heavily on oil revenue, lower energy prices can reduce government income and weaken reserve accumulation. In those situations, the central bank may face more difficult policy decisions regarding liquidity, public spending, and exchange rate management. This relationship between oil prices and currency stability is one of the most important long-term issues for Iraq's economy. The future strength and sustainability of the Iraqi dinar are closely tied to Iraq's broader economic development strategy. Diversification remains a key objective, repeatedly discussed by Iraqi officials and international financial institutions. Economic diversification means reducing dependence on oil and expanding sectors such as agriculture, manufacturing, technology, tourism, logistics, and private enterprise. A more diversified economy generally creates stronger long-term currency fundamentals because it broadens sources of national income and reduces vulnerability to external commodity shocks. For IQD followers, this means the long-term outlook for the dinar depends less on speculation and more on Iraq's progress in structural economic reforms. Important indicators include banking modernization, anti-corruption measures, infrastructure development, private sector growth, fiscal discipline, foreign investment attraction, and improvements in political stability. The banking sector is especially important. Iraq has spent years attempting to modernize its financial system, improve compliance standards, expand electronic payment systems, and integrate more fully into international banking networks. A stronger banking sector can improve investor confidence and support broader economic development. Additionally, international cooperation remains significant. Iraq works with organizations such as the International Monetary Fund and the World Bank on financial reforms, budget planning, and economic stabilization measures. These partnerships often encourage gradual reform processes rather than sudden monetary shifts. Another important aspect of this discussion involves public perception and expectations. Online speculation surrounding the Iraqi dinar has existed for many years, particularly in social media communities and investment forums. However, it is essential to separate realistic economic analysis from exaggerated claims or unsupported narratives. The reality is that central banks generally prioritize stability over dramatic currency changes. Abrupt exchange rate moves can create inflation risks, banking stress, and economic disruption. Therefore, policymakers typically favor gradual adjustments aligned with broader economic conditions and national policy objectives. When examining Iraq specifically, the government faces multiple balancing priorities. Authorities must manage inflation, maintain public confidence, support economic growth, stabilize the banking sector, and preserve foreign reserves. These goals require careful monetary management rather than unpredictable exchange rate actions. There is also the issue of domestic purchasing power. Exchange rate decisions affect ordinary Iraqi citizens directly. If policymakers were to mishandle currency policy, the cost of imported goods could rise sharply, affecting food prices, medicine, fuel distribution, and daily living expenses. This is another reason why the central bank approaches currency management cautiously. In recent years, Iraq has introduced certain exchange rate adjustments when necessary. For example, there have been periods where the official dinar rate was altered to address fiscal pressures or improve government revenue flexibility. These decisions were made through official policy announcements and economic planning, not through uncontrolled market activity. This highlights another important lesson for IQD followers. Monitoring official statements from the Central Bank of Iraq, government budget announcements, oil revenue trends, and reform policies is far more valuable than relying on rumors or speculative predictions circulating online. Looking ahead, Iraq's long-term economic prospects contain both opportunities and risks. On the positive side, Iraq possesses enormous natural resources, a strategically important geographic location, and a relatively young population. Continued infrastructure investment and economic modernization could gradually strengthen the country's financial position over time. Iraq also continues to pursue energy development projects, transportation initiatives, digital banking expansion, and regional trade partnerships. If these efforts succeed over the coming years, they may contribute to stronger economic stability and improved investor confidence. At the same time, challenges remain significant. Political uncertainty, regional tensions, corruption concerns, infrastructure limitations, and dependence on oil revenue continue to create obstacles for sustained economic transformation. These factors can affect international investment flows and influence long-term confidence in the Iraqi economy. Another critical factor is inflation control. Central banks around the world closely monitor inflation because rising consumer prices can weaken purchasing power and destabilize economies. Iraq's managed exchange rate system partly serves as a tool to limit imported inflation by stabilizing the cost of foreign goods. If Iraq can continue maintaining reasonable inflation levels while improving economic productivity, the overall financial environment may become more stable over time. Stability is often one of the most important foundations for long-term currency confidence. For viewers following the IQD, it is also useful to understand that currencies are ultimately reflections of economic strength, institutional credibility, and financial stability. Exchange rates are not determined solely by hope or speculation. They are shaped by complex economic fundamentals, government policy decisions, reserve management, trade flows, investor confidence, and international financial relationships. This is why serious financial analysts focus on measurable indicators such as GDP growth, reserve levels, fiscal deficits, oil revenues, banking reform progress, and monetary policy actions when evaluating Iraq's currency outlook. One interesting aspect of Iraq's current monetary structure is that stability itself can be viewed as a policy success from the perspective of Iraqi authorities. In a region that has experienced periods of geopolitical tension and economic uncertainty, maintaining a relatively controlled currency environment can help preserve public confidence and economic continuity. For businesses operating inside Iraq, exchange rate predictability is often essential. Companies importing goods, paying salaries, or planning investments benefit from a stable currency framework because it reduces uncertainty and financial risk. International investors also pay close attention to currency management. While some investors prefer freely floating currencies, others value stability and predictability, especially in emerging economies. The credibility of the central bank therefore becomes extremely important. The Central Bank of Iraq's reputation depends largely on its ability to maintain monetary discipline, manage reserves responsibly, and avoid excessive instability. Over time, consistent policy management can gradually improve international confidence in Iraq's financial system. It is also worth noting that many countries around the world use managed exchange rate systems in different forms. Iraq is not unique in this regard. Some nations peg their currencies directly to the US dollar, while others maintain managed bands or hybrid systems. The objective is often to balance economic flexibility with stability. In Iraq's case, policymakers appear focused primarily on avoiding severe currency shocks while supporting gradual economic development. This cautious strategy may not satisfy those expecting dramatic overnight changes, but from a macroeconomic perspective, it aligns with how many central banks approach monetary stability. The broader lesson from today's news is that Iraq's exchange rate system is intentionally designed to be controlled, rather than purely market-driven. The central bank holds the primary authority over exchange rate decisions, and historical evidence shows that the dinar has often remained stable even during difficult national circumstances because of that structure. For short-term observers, this suggests continued emphasis on monetary stability and cautious policy management. For long-term followers, the more important story may be Iraq's broader economic reform trajectory rather than speculation about sudden exchange rate movements. As Iraq continues working on banking modernization, infrastructure rebuilding, energy expansion, and economic diversification, the country's financial future will likely depend on sustained institutional progress and sound policy decisions. These are the developments that serious analysts will continue watching closely in the months and years ahead. At the same time, viewers should remember that currency markets and national economies involve many variables and uncertainties. No single development guarantees future outcomes, and responsible analysis always requires patience, context, and realistic expectations. Thank you for watching today's update. If you appreciate balanced, factual, and responsible coverage of Iraqi dinar news and Iraq's economy, make sure to subscribe to the channel and turn on notifications so you never miss an update. As always, this content is provided for informational and educational purposes only and should not be considered financial, investment, or trading advice.